So firstly, on the furthest away from me is Ruben Tan. Ruben is the CTO of Neuro, a blockchain infrastructure provider based here in KL. He's been studying distributed ledger or consensus now for over 4 years, and in a little while Ruben's going to give us a presentation as an introduction to blockchain. And next to him is Ruben, parents Malaysian, but started his career in Silicon Valley, several years over there, and then moved to New York. Worked as an analyst for hedge funds in New York, investing back in Silicon Valley. So a knowledgeable tech guy through and through. Since then, he's more recently moved to Singapore and already built and successfully sold a startup in the compliance space. So two guys who are really going to help us think through this issue. So I'm going to come to a minute and say, well, what the heck has blockchain got to do with captives, okay? What the heck's that all about? But first of all, I want to make sure you're all still awake. So I want everybody, please, put your arms up if you've heard of blockchain. You heard of blockchain. So some people never heard of blockchain. But I want you to keep your hand up if you understand what blockchain is. Okay, we've got a scattering. Got a scattering. Okay, that's good. I'll be writing down names. You'll be getting questions later. No, I'm just joking. So what is this all about? Why are people getting excited about it, and what does it mean? Well, before we talk about some of the detail, I want you to cast your minds back to 1994. There was something around called the internet. Just at the start of that year, there was something established called the TCP/IP protocols. Now, before that, there was no real way of sort of categorizing websites properly. So what the TCP/IP protocols did was made sure that every website had a unique identifier and number, and it started to get a bit organized. The other thing that happened in 1994 is the world's largest internet service provider was called AOL, America Online. In 1994, they changed from charging for internet access on an hourly basis to a monthly basis. You try and think about that now. Can you imagine explaining to your kids now that, oh, you can only rent an hour's worth of internet? It's almost inconceivable. And yet that was the big change that happened in 1994. For the first time, the world's biggest internet service provider switched to monthly billing. And then what happened at the end of the year and into early 1995, something was set up called the ICANN Foundation. And that was where we really got the naming classifications for websites. So all the .coms and all the rest of it, that's where there was some formal naming. And what happened after that? Well, it all just went crazy, didn't it? Do you remember that? For the next 5 years, anybody who was even remotely connected with technology saw this massive boom, and no one really knew what was going on because, in 1994, we were all sitting there thinking, well, the internet, isn't that something for money laundering? Isn't that something for terrorists? Isn't that something for pornography? That seemed to be the only things that the internet was really used for. And companies, if they did have a website at that time, it was maybe 1 or 2 pages, nothing more. But we know what happened after that. It all went crazy, and then we got towards 2000, 2001. It had all gone a bit too crazy, and we had the dot-com bubble, and most of those companies were swept away. But we were left with the GAFA. We were left with Google, Amazon, Facebook, Apple. Those big, successful companies that really did have a good business model, really did have a hold. And those are now the biggest companies in the world. I would say to you, think of today as going to a meeting in 1994, okay? What blockchain is probably going to do is the same as what the internet did. In the same way that people back then were asking, oh, why do we need so many websites? No one's ever going to use them. People are asking today, why do we need new currencies? Why do we need new technology? Who's ever going to use it? I would say all of us, and soon. So, for the first 30 minutes or so, I'd like to invite Ruben to come up and give a bit of an introductory talk on all of this. And I want you to think about certain things as this relates to captive, as Ruben's going through this. Think about how much time, those of you who are running captives, those of you who are advising captives, those of you who are just peripherally involved in captives, how much time is spent on administration? How much time is spent on compliance? How much time is genuinely spent on thinking about risk and risk transfer? And how much energy is put into just doing the stuff we have to do to make it all work? I sit in board meetings on several captives, and frankly, sometimes we get to the end of the meeting and all we've talked about is compliance. And I'm like, what the heck? This should be an administrative function that moves to one side. For me, blockchain will do to captives the same as it will do to many other technologies. It will bring security and it will bring speed of transactions. And this stuff will not happen this year, but we will look back in 10 years and this will have totally transformed the way all of us do business. So please join me in welcoming Ruben to hear a little more.
Hi. Thanks for the amazing introduction to blockchains and how technology disrupts practically everything. So a bit of a good afternoon, ladies and gentlemen. A bit of a background about who I am and what we do. I'm from Neuro. I'm the CTO of Neuro. It's a fancy name for saying that I do all the tech stuff. Personally, I am a tech person. I am an outsider to the insurance industry, but I've quite a bit of years doing tech stuff. So today, I will try to keep it strictly English, all right? No techno lingos. So, who are we? Neuroware is the first of many things. It is a first Malaysian company to graduate from the 500 Startups Accelerator in Silicon Valley. We're also the first company in Asia to provide a public blockchain API. Fancy way of saying that you can use blockchains without having to hire computer scientists, stuff like that. So we're also the first to develop a non-financial blockchain agnostic protocols. It's not relevant to your knowledge about blockchains, but suffice to say that it's something that we are proud of. And we're also the first to help organize the world's first bank-backed blockchain hackathon with DBS. So today, just a takeaway of what we do. We provide blockchain infrastructure. We are the Amazon Web Services. If you know Amazon Web Services, they provide cloud infrastructure. We are kind of the same. We provide infrastructure for you to access blockchains without having to hire really smart but incomprehensible people. All right. We also provide blockchain training as well, consultancy. If you need to know anything, if your organization wishes to know more about blockchains, we have paid training workshops to get you up to speed. If you have a tech team and you want your tech team to leverage blockchain technologies and understand what's going on behind it, we can also provide a technical workshop. It's slightly different from normal workshops. So, yep, we got through that pretty quickly because today we're talking about blockchains, not Neuroware, all right? So a lot of times I hear people asking me about blockchains. A year ago, I had trouble defining blockchains to people. Nowadays, I still have trouble defining blockchains to people because the problem is I can tell you what the internet and how the internet works. But if this was 10 years ago or 20 years ago, you probably wouldn't see the whole Web 2.0, e-commerce, social network, mobile network, Internet of Things coming. You will probably never be able to imagine the world that we are living in right now. Our computers, Massive computers, speaker systems, telephone, everything is contained into one single small little device in your pockets. So blockchains is a infrastructure. When you hear people comparing blockchains to the internet, it's actually true, because blockchains is literally the second coming of the second internet. But for us to get on the same page, we can broadly define it into three aspects. The first is that blockchains, regardless of what blockchain it stores data of some sort, right? Bitcoin stores a ledger of who paid stuff to who. The important thing about how blockchain stores data is that the moment it is stored inside a blockchain, it is considered immutable. In English, this means that this is not, you can't change the data inside it. You can't delete it. You can only amend to it. So the other aspect is that blockchain is a network. A blockchain is not a single computer. It is a network, a global network. And this network is not controlled by anybody. There is no central authority controlling how Bitcoin operates. There's no central authority controlling Ethereum and how it operates. There are people developing the software, but the same developers cannot change how things work. Finally, blockchains is an infrastructure. Infrastructure to allow people to do something. Bitcoin allows you to pay your peers without going through a central party. Ethereum allows you to deploy smart contracts onto the internet and executable only by you, hosted by basically nobody, not a single centralized structure. So let's dive a little bit deeper. What is a blockchain, if you break it down? A blockchain is simply a chain of blocks. Each block that you see here contains a bunch of transactions at a specific point of time. Block 1 contains a bunch of transactions that happens yesterday. Block 2 contains a bunch of transactions that happens today. So it's always incremental. Each block also contains contents of its previous blocks. It contains information that points back to the previous block. All right? This way, it forms a chain. You can't take away block 3 and still have the entire chain remain intact, because block 2 contains information of block 1. Block 3 contains information of block 2, which contains information of block 1. This forms a very tight chain. It's a data structure that allows us to achieve immutability. Now, it is also a network. It is not a central server. All of you here, when you're using your phone actually connects to a server somewhere in the cloud, right? If you use WhatsApp, it's controlled by the WhatsApp corporation. If you're using Google, it's controlled by Google. The servers are controlled by Google corporation, right? Or alphabets. But anyways, in the blockchain world, all of us are equal. My phone connects to your phone, literally. There's no central party to connect to. We are all connected to each other. This is called a peer-to-peer network. So every time I receive an update, I will broadcast it to all my peers. So if I receive an update, I will tell my friends here that something has happened, right? And they, in turn, will tell their friends there. So it's basically how a peer-to-peer network operates. Any updates, if I want to update information in my node, which contains the exact same data that you have, all I need to do is to update myself. Because the moment I update myself, I have to broadcast my updates to everybody else, correct? So far we have established two major facts. Number one, a blockchain is made of a network of nodes that connect to each other. And the second thing is that inside each node is a chain of unbreakable blocks. So why are these two things important? Because only these two things is not sufficient to build anything useful. Why? Because if everybody has the same data, let's say if all of us here have yellow pages, I'm sure you guys still remember yellow pages, right? Yeah, each of us have a phone book, yellow pages, right? If I want to update my yellow pages with a new entry, how do I ensure that everybody else there gets the information? So this problem, ensuring that everybody has the same data at a specific point of time, is actually a classical computer science problem called distributed consensus. It is also one of the hardest problems to solve in distributed computing. It is also mathematically proven that it's impossible to solve. There's only a certain trade-off that you can make. Now, how does blockchain solve this then? Being a distributed network itself, how does it solve a distributed consensus problem? Which is interesting because blockchain uses a concept called proof of work, most blockchains anyways. Most successful blockchains such as Bitcoin, Litecoin, Dogecoin, all of these, they use a consensus algorithm called proof of work. How does it work? It basically selects some of the nodes to become miners. Now, miners are not actual mining computers. They don't actually mine physical mines to get gold or something like that. What they do is, first they pick out the transactions. Like every time I want to make new data, I want to commit new data into a specific block, the miners will pick up all this new information, checks them to see if they are valid, and then packs them into a new block. But before they can add the new block into the distributed ledger, they must show that they have committed some resources to show that they are trying to play nice. So what they do is they have to solve a very difficult mathematical puzzle in order to ensure that, in order to prove that they have done something to allow them to add data into the ledger. So there are many, many miners out there, thousands of miners out there racing to solve the mathematical puzzle. The first one that solves it gains the right to add the block onto the blockchain. And the moment you add a new block into the blockchain, you're rewarded with something, usually new coins, newly minted coins, all right? So this, in effect, it creates a situation where every update to the distributed ledger, every update to your data here is verified by somebody else out there who have spent significant amounts of resources to ensure that your data gets into the blockchain, right? Now, what are the problems here? If I am a miner, if everybody can be a miner, what's stopping everybody from mining and trying to get rewarded with new coins? So, this is one thing that's interesting about the world's biggest blockchain, which is Bitcoin. It actually has an auto-adjusting difficulty. What this means is that the more people that mines the blockchain, the harder it is to mine a new block. The mathematical puzzle actually becomes harder the more people that tries to solve it. This is what you see in the early days of Bitcoin, right? You have racks of computers at home cooled by a fan in somebody's garage. The moment people realize that people can actually make money off Bitcoin, this is what happens. Entire corporations have been spawned solely to do mining, all right? Now, let's get back to the real world. Why are we talking about blockchains and why does it matter to the real world, right? So, there are four major important things you got to remember when it comes to blockchain. Again, we never saw the social network coming. We never saw how connected we are today. Did you remember last time when you had a phone call to your friends? Like you actually picked up the phone and called your friends. Nowadays, everybody chooses to WhatsApp your friend or do whatever things, or even call through WhatsApp. But used to be a time, not long ago, where people can pick up the phone and call each other. But at that time, you wouldn't have known that the world has changed so much. Now, blockchains have the potential to usher in a new era called the Internet of Trust. How would it look like? We're still trying to figure it out. But there are four important things that blockchains provide to anybody that leverages this technology. The first is to save cost. As any new technology must be able to prove, they must be able to prove that they can save costs. Second thing is they enable innovation. Blockchains have actually opened up new markets, new style of banks, new banks that comes up entirely based on digital infrastructure. They don't have brick and mortar branches out there, right? All these challenger banks are actually giving the real banks kind of a hard time. Now, the third one is providing us, especially software developers, a strong fundamental to build upon. And finally, it empowers trust. This is the interesting and the most important thing that you can leverage from blockchains, which I'll touch on in a bit. Now, how do we save costs? Think about it. As a corporation, right, if you want to deploy your own database, storing maybe 1 terabyte of data of your most sensitive customer information that you cannot lose, what do you have to do? Number one, you have to run your own data center. You have to hire your own security. You have to make sure that the building is properly done. You have security measures. You have firefighting systems and all that. And then you have to hire system admins just to run all these data centers, right? What if I told you that with blockchains, instead of having a data center, you can have all your front desk people be part of your data center? What this means is that, remember, blockchain is a distributed network. There are people out there, maybe I am part of it, maybe just a random college student's computer. All these computers are working together to provide you an infrastructure. When you store data on the blockchain, you're actually storing data on their computers. You don't have to run your own data center. You save costs that way. So imagine how much you can save just by decommissioning an entire data center or repurposing it to do something else. This is a massive cost savings that most companies can look forward to if they leverage blockchain technology. Next, enabling innovation. Now, I've heard a lot of people, banks especially, no offense, but this is going to be a little bit fancy, but I heard a lot of people, especially from banks, they talk about open APIs. It's a good thing. What open APIs means is that startups like us can finally play together with the big boys, right, by calling their APIs. But the problem with all these open API initiatives is that I need to trust your servers. I need to trust that you have deployed your server properly, you have done your due diligence and your security and all those kind of stuff. I need to be able to trust you in order to talk to you. Now, let's not talk about startups. Let's talk about companies talking to other companies. Company A wants to connect with Company B, but Company A has to use Company B's API in order to function. How do you trust them? It becomes a game where you have to sign contracts, get your lawyers involved and all that. Blockchains, on the other hand, is a neutral platform. It is not a network controlled by anybody. If you put a smart contract on the blockchain and both companies talk to each other using the smart contract, then you eliminate the whole trust problem, right? You trust the network. You don't have to trust each other. Trust becomes optional when it used to be mandatory. The third one is strong fundamentals. Now, no matter how strong we think our systems are, there's always a way to attack it. And I'm saying this coming from a tech background. I've seen so many supposedly secure systems being breached. For example, this year, Swift network lost 81 million USD in a heist, right? Swift, the company that allows big banks to talk to each other around the world. And LinkedIn was breached as well. 117 million accounts were compromised. When we did a security analysis, when their security report came out, they realized that LinkedIn was using really outdated algorithms and data structures and practices. So you got to understand that blockchains comes with three things. Immutable data. The way the data structure is structured, data is structured. It's impossible to change data inside a blockchain. It also is built upon a very strong foundation of cryptography. Cryptography is the one thing that allows you right now to send your passwords to Facebook's server and not have anybody intercept it. If they intercept your messages, all they see is a bunch of random alphabets and strings. Cryptography is the foundation in which a lot of technologies are built upon. It is also one of the most neglected fields in computer science. Ask any software engineer, none of them, I guarantee right now that none of them would proudly proclaim that they are cryptography experts. But cryptography experts, actual experts, are the ones that built blockchains. So this provides you a strong fundamental that you can trust. Finally, it has a strong consistency. The whole consensus algorithm, people expending electricity to ensure that your data is packed properly into a neutral public network. All these people are working together, spending a lot of money to ensure that you have the foundation to work upon. So all these three things combined means that you actually have a very powerful platform to work on instead of having to rely on building everything yourself, which is never a good idea. It's like somebody built the wheel for you. Now you just got to use the wheel instead of building your own wheel, right? So finally, trust. The biggest thing that blockchains bring to the table is to enable and is to turn trust into something that's optional when it was mandatory before. Like I said, when two corporates want to work with each other, they have to trust each other. There's a lot of manual process involved. I have to go to your company, I have to talk to your CIO, I have to maybe talk to your tech team as well, we have to sign a contract. All this might take 2 or 3 months. What if you can cut that time down to 1 day, less than 1 day, right? We talk about automation, we talk about digitization, we talk about how we can work with foreign companies and all that, but to actually do that takes a lot of manual process. Now, blockchains has the potential of eliminating all that things. Imagine if you want to work with Visa, you have to sign up with an API key or whatsoever, you have to provide your own KYC to them, right? But imagine if that's the only thing you need to provide them. You can do it in your house, in Malaysia, talk to a company, an international company, and get everything done within 1 day, and suddenly the next day you can start accepting payments using the Visa system, right? Instead of having to sign all the contracts that you're supposed to sign, get your lawyers involved, pay a lot of money. So this can only happen because if we trust blockchain network with a strong mathematically proven foundation, that means that trust becomes optional now. It doesn't have to be something that we have to worry about. So all these four things combined is what has taken the world by storm. So as of January this year, these are all the players that are actively involved in blockchain research when it comes to blockchain, anything that's related on blockchains. In fact, these are some of the major players that you might know. All these people are actively involved in blockchain projects for different reasons. Some of them are looking into remittance. Some of them are looking into building a new trade finance network to cut off SWIFT from the picture. Some of them are looking at how do we store documents or proofs of documents online, how to improve your supply chains and things like that. So all these companies, they're actively looking into blockchains and how they can help their corporation. In fact, there are already 2 countries that put their entire national currency onto the blockchains themselves. Senegal and Tunisia, right? There are many countries out there that are reevaluating the way how digital infrastructure can help their government services. And these are two countries that are active, that have been publicly announced doing the same things. So we've come to a point where I have rushed through what blockchains do and why do they matter. Now, before we move on to the Q&A session, just gotta take away a few things as a summary. Now, blockchains itself, the term blockchains, is a very vague term. It can mean cryptocurrencies, it can mean smart contracts, it can mean anything, right? And a lot of people forget that blockchains are what blockchains are supposed to do. Now, blockchains are what we call a decentralized technology, a distributed technology and a decentralized technology. So what this means is that it's a complete change of paradigm for what we're used to. Last time, we're all familiar with the idea of clients and server. We have a server to connect to. If something goes wrong, we can blame on the server, correct? If something happens in my payment system or something happens to my infrastructure, I know who to turn to. But having the knowledge of knowing who to turn to also comes with a cost, because now you have somebody who can turn off your entire infrastructure if they want to. So this is not a big problem in the real world, because obviously we have a lot of all these legal measures to protect against it. But imagine this, you get into a conflict with your supplier, a supplier that provides your critical infrastructure. You get into a conflict with them, they turn off your infrastructure, and then even though you are in the right, it still takes weeks of legal process to get them to turn it back on. So this is weeks of lost revenue and weeks of operations being screwed up just because you have to trust another person. Now, in a decentralized world, the whole point of the blockchain technology is to return to you as an individual or as a company, as an entity, your own power. You control what you have. Right now, your ICs, your identification cards, right, are stored in the government server, correct? Your identification, you have to be able to connect to our government's server in order to verify that you exist as a citizen. Why does it have to be that way? Why can't we have our own identity stored in ourselves? Why can't we, when we want to verify our identity, we verify it with our own computers, our own phones? This is something to think about when we use blockchain technology, and how it can disrupt the entire market. Insurance, for example. Insurance companies store your policy, correct? There are actually talks right now of people owning their own identity, their insurance, their identity, they are tied to insurance policy, so that when they go to the hospitals don't need to go through a lot of processes in order to get them treated, get their information, their insurance policy sorted out. Now, on the back, it might seem like it's a simple thing to do to just call the insurance company's servers and get everything sorted out. But the whole process, this whole process is actually a very complicated process. There are a lot of threats involved. There are a lot of risks involved in this entire process. So instead of doing this, why can't we store, manage our own identity and manage our own insurance policies as an individual? So when we think about blockchains, we think about disrupting the entire way we think how the entire world works. And that is the most important thing. Nobody saw the coming of mobile networks. Everybody has a mobile phone. Nobody knew that that would become a day that this would happen. Last time you have this massive, I don't know, like brick that you have to carry around for your mobile phones. Now everybody has a tiny little phone, and in the future, they might be embedded into your skin, into your body itself, rather than having to carry around a device. So, how did the movement from traditional phones to mobile networks change the entire world? We are getting more connected. It is the same question that we ask. How does this whole centralized structure of the world, its transition into a decentralized world, change how we view businesses and how we view how things work? So those are the things that we need to ask ourselves whenever we look at blockchain technologies and distributed technologies, in addition to all these things. So right now, a lot of people know blockchains as just the cryptocurrency, especially Bitcoin. This is what people know about blockchains. But what I'm telling you right now is that underneath Bitcoin, there is a whole new world to be discovered. So having said with that, I'll pass it back to Steve here to continue the Q&A session.
Brilliant. Thanks very much, Ruben. Thank you. Stop working. Okay, I've been given the backup mic. First question, who owns Bitcoin here? Then I'm going to admit to it. I do. I got some. I'm just checking the price. It's at $3,894 per Bitcoin today. Gold's at about 1,000 per ounce. But it's very volatile. It's all crazy. It's all changing. 2 days ago, Bitcoin was at $4,400 a Bitcoin. So for each one I own, I've just lost $400 in the last 2 days. So I hope you commiserate with me, and any donations will be gratefully received as you're leaving the building. But this is a crazy world, isn't it? This is all changing so fast. A lot of this stuff is really, really confusing. But do you know what? I'm going to ask you some stupid questions, Ruben, because I really didn't understand some of that still.
Sure.
And I want you guys to think about this as well. There are no stupid questions on this, so please give it some thought, and today's your chance to ask a few things, but let me go through some of the basic things that I didn't understand first. Tell me again, what is immutable? What does that actually mean?
Okay, so immutable is basically a fancy term that we techies say that something cannot be changed, something that cannot be deleted, cannot be edited. Now, a lot of you here might think that as long most data are immutable, the fact that it's not. If you have a database, your system admin can go into your database and change records there. And any changes can be the traces of people changing all these things can be removed. So whenever people's databases get hacked, this is basically what's happening. So when we talk about immutability, there are a lot of other systems out there that provides immutability. But blockchains, along with other things, everything, the whole aspect of the miners, the network, and the blockchain itself, data structure itself, ensures that I can share with you my database. I can give you my database, but I can know for sure that you cannot change anything inside it.
But let's put this in really simple terms then.
Yep.
So if I have a database, someone can hack into it and change it. But if it's on the blockchain, everybody can view that database. They can't see the contents, but because of the keys, it's like when you use your credit card, you get all those little X's and you don't see the numbers. But they can see through those keys, someone's tried to change the math and it doesn't add up anymore.
Correct.
Therefore, someone's tried to break the system. So we all know someone's tried to break the system.
Yep.
So we have to reset the system to a few seconds
Well,
ago.
we don't actually reset the system. We just sit back and laugh because we know it's not going to happen.
Okay.
Yep. Fun fact, in order for you to hack the Bitcoin network right now, you need the budget of the Americans' military budget because it just takes that amount of money for you to build up the hardware to attack the system. And now remember, Bitcoin itself has an auto-scaling difficulty. What this means is that the more computers you throw at the network to attack the network, it becomes harder and harder and harder to attack it. So this is the fun part about blockchains that are derived from Bitcoin's protocol. So, like I said, we just sit back and laugh because we know that this guy is trying to change something and it's not going to happen. Mathematically speaking, it's not going to happen.
Now, there's a couple of other things you mentioned which I'm just going to recap and hope this is clear. So a miner is really just someone who's doing some computing processing.
Yes.
So it's not that complicated, really. It's just someone who's got some computers and they're doing some processing.
Yep. So whenever I want to send money to you, when I send Bitcoin to you, right, it creates a transaction. So that transaction gets sent to all participants in the network. They can all see that I'm trying to send you some money. Okay? They don't know who we are, but they know that there's an attempt to send money from one person to another. These miners are the one that picks up all these transactions, packs them into blocks, and then work on the mathematical calculations so that they can earn the right to put this new block as well as our transaction onto the blockchain itself.
Okay.
So,
Robin, I'm just going to, I know we've got questions already in the audience, and I'll come to you very soon, and please get more questions ready because I want them. But Robin, I just wanted to sort of go sideways a bit. I know where we're sitting, I know whose building we're in. I mean, is this a regulatory nightmare, or is this a regulatory blessing? How from the regulatory side do you think these changes are going to be addressed, and have they been addressed now?
I think the regulators are being really, really open-minded. They have a great, in fact, many of the regulators I've met have a great understanding of the technology. So what I see happening in the regulatory space is more embracement than don't do it or don't use it. I guess it depends on context as well in terms of what aspect of blockchain technologies we're talking about. So obviously the big one that everyone's concerned about are virtual currencies. So if you can think of blockchain as a platform like iOS or Android, and virtual currencies being merely an app on that platform, that app is the one that's the big concern right now, I'd say, especially with this year with the the many ICOs, the popularity of ICOs as a way of raising money for companies.
Yeah, that's, for those of you who haven't been following that, an ICO is an initial coin offering. We all know what an IPO is, I guess. That's a traditional way of raising money. An initial coin offering is essentially you make up a new currency and build the infrastructure and say, you want some of these coins, you're going to have to pay me and fund my organization, stroke company, stroke luxury yacht, whatever it is. Anyway, let's jump to the audience, and I've got more questions here, or we can keep jumping around.
Yeah.
My preference is to get the audience in.
Thank you. Actually, the first question was about the regulator just now, but I think you have already tackled that question. But I do have another angle, perhaps. If regulator have, as you put it, been embracing this new currency, then why is it that only 2 countries that have so far agreed to convert their currency into a digital currency? That's number one.
Yep.
Number 2, if there were to be any concerns with regulators in accepting Bitcoin as one of a legitimate currency, if you like, what would be their top concerns there for them to acknowledge and accept it as a real currency?
Okay.
Tradable.
Great question. Thank you. So the question was, why aren't we seeing more announcements of regulators or government bodies adopting blockchain technologies? And on the second part of the question would be the Bitcoin as a legal tender. How does it work? So the fun fact here is that in Japan, Bitcoin is a legal tender. It's been announced this year. Australia is following suit as well. They're evaluating if they can put Bitcoin as a legal tender and what are the implications on these things. We got to remember that the answer to both of this question is rather simple. Blockchain technologies, there's only one single two blockchains that have repeatedly proven itself to be mature, Bitcoin and Ethereum. There are many other coins out there, many other blockchain technologies out there, Hyperledger, all to mention one of them. They haven't been proven in production yet. So a lot of government bodies are looking into blockchain technologies, performing their own R&D to see what are the implications. And as regulators, they have to be careful. They don't want to announce something too hastily. They don't want to be the ones that gives the wrong guidelines to people and shut off an entire ecosystem that may have grown without them saying anything, right? So a lot of regulators right now are just holding back. In fact, we have been in talks with regulators in Malaysia, and all of them have the same stance. They want to wait and see and contract people like us to help them do proof of concepts or prototype some interesting things that they want to try out. But you won't be hearing a lot until at least in a year or two. Right now, it's all in R&D stage. Same thing with Bitcoin as well. Japan is the first one. Personally, I feel like this is a bit nuts, but they seem to be doing really well in declaring Bitcoin as legal tender. And what are the implications? In this thing, it's hard to tell, to be honest, because that means if you adopt Bitcoin as a legal tender, you don't actually have control over the currency. That currency itself is subject to market forces. There's nothing you can do to play around with it. So how do governments adopt it? Who knows? But the fact is this: when the internet came up, nobody knew how to regulate it as well. So today, nobody still knows what's the best way to regulate the internet. So that might be the case. Like regulators just sits back and says, nothing we can do about it.
I think to add to Ruben's point as well, I mean, the final part of the question was what the regulators' concerns. I think Ruben's done a great job in addressing the validity of your own currency. That's definitely one of the concerns. I think the other two are obviously, money laundering and terrorist financing. But from the fact that the wallets are public, it's actually difficult to launder money or fund terrorism using Bitcoin or Ethereum.
Yep.
More questions from the floor, please. Please, anything you like, because it's. Yep. One at the back there, then Richard.
Just very curious, because what Ruben said just now. You think that the ease of money flow from one party to the other party, and my concern is that would there be any government oversight over these sort of transfers? And I'm not too sure any regulator will be happy with it. I mean, you just can't figure out what is going on.
Yep.
And if I look from a regulator point of view, if this is massive, you can just move money now anywhere around the world through cryptocurrency or whatever you call it.
Yep.
I mean, the government practically lose the power to control the money supply.
Yep, that's good.
And how are they going to steer the economy and start to contract money and stuff like that?
Yep, that's
so
a really
I think a lot of government will really look hard at this. There must be certain areas where, like you said, we really don't know what is the purpose of the money. It could be for legitimate purpose or otherwise.
Yep, that's a very good point, which is why I said that the Japan's move to declare Bitcoin as legal tender, in my personal opinion, it sounds a bit hasty. You got to remember that decentralized technologies are meant to bring power back to the people. It's fundamentally at odds with what the government wants, which is to retain as much power as they need. Same thing with big corporations as well. Big corporations want to retain their monopoly as well as their power and market share. They don't want to release that power to other people to level the playing field, so to say. But having said that, technology is here, we can't ignore it, right? Regulators are looking into it, trying to figure out what they can do with regulating this kind of stuff, either through being able to have a better insight into money flow between one company and another company, or one individual to another individual, or things like how do we use a multi-signature technology or an escrow technology which is built into the Bitcoin payment contract itself to better control things. In fact, this is also one of the projects that we are doing right now. Not in terms of transferring money, but in terms of having control, having the capability to act as a form of control and oversight to a specific, very specific kind of transaction. So, you want anything?
No, I think it's...
Okay. So, so I guess the answer to this is that it really depends on what we can see in the future. There's no telling what they can find out of this, but as I've mentioned in my slides before, the 4 benefits that blockchains will bring is there. Depending on how you're going to leverage it to your advantage, it really depends on how you sell it to whoever that's interested in regulating it.
I think what's interesting is when around about the week when Japan sort of formally gave the nod to Bitcoin as being okay to use as legal tender, you could see that there was a huge spike in the price of Bitcoin, and that's funds in Japan switching some of their money, whether they're hedge funds or whatever sorts of funds, into that new opportunity. Now, is that building a bubble? Who knows? But funnily enough, the strange thing that happened again was just a week or two ago, Korea took the same decision. And it surged again, and everything's gone up again. So this is moving with or without the agreement stroke approval of global world leaders. It's just moving, which is really interesting. It's like, it's very difficult to see where it's going. It's very difficult to see whether there's a tulip bubble or an Asian financial crisis bubble or a dot-com bubble building. I think it's pretty safe to say, yes, there is, but we just don't know what it's going to do and when. Richard, you've been waiting patiently.
So when it comes to blockchain and insurance, are there already cases, companies implementing blockchain into their insurance systems in whatever way? And then to take that a step further, how can it be applicable in the future to captives?
Let me sort of deal with that one a little bit. So So I'm fairly big and old and slow, which is a bit of a coincidence, really, because I've spent a lot of my life working in insurance, which is also pretty big and pretty old and pretty slow and doesn't evolve very quickly. And it's relatively protected, and it isn't always the best in terms of customer focus. So, Robin, I'm going to ask you to talk a little bit about what we've been doing together. We've been building a platform to look at how we can use these sorts of technologies to improve the way that's perceived in the customer eyes. And that doesn't mean you're sort of telling the customer you're selling them blockchain, but it's using some of these techniques to give a better customer experience. Robin, just
Sure.
a quick word on that.
So as Steve mentioned, at Insure, we are building a platform right now. Basically, the way the platform works is we focus on the commercial insurance space, whereby a company will log into the platform either through an app or a web browser. They will give us an idea of what they're looking for, and then from there, we have about 22 insurers that we're working with that have agreed to load their policies onto the platform. So so basically, the company will tell us what they're looking for. They'll then get presented with options, and then as soon as they've decided which option is of interest to them, it activates a smart contract, which essentially has them covered as soon as possible. Okay. The great thing about using smart contracts, which is part of which is a derivative of blockchain technology, like a version of blockchain technology, is such that the attributes for those contracts will be accessible through the chain. And so later down the line, if the company wants to make a claim, they will tell us the details of that claim, and should they match up with the details of the policy, the insurer will then get a message immediately saying, pay these guys now or as soon as possible.
So I think, I mentioned it at the start. I think the key issue for us at this stage, and the bits that I can see now, it's security. I mean, a lot of the last hour we've been talking about that it's impossible to break the chain. That translates to me in, once you do your first bit of KYC, that's it. You don't have to do it again, ever. Once you know who that person is, that's locked in. They know who you are, you know who they are. You don't have to go through that all again. And we've all seen those 20-page insurance forms you have to fill in, and the first question is, what is your name? And you sort of go, oh my God, you're asking me, what the heck, yeah. If you don't know by now, you've had a business relationship with me for 20 years, for goodness sake. So getting rid of a lot of that administration, making sure that security of knowledge and data then triggers the next thing, which is speed. The transactions will just get faster and faster. Now that's a double-edged sword. It's great for the customer because things get done more efficiently and more quickly. It's not so great perhaps for certain insurers who'd rather hold on to their cash a little bit longer. But hey, I mean, there's always a downside to these sorts of things.
So I would like to add to that as well. One of my slides talk about building building an app on the strong fundamentals. Going with what Robin just shared, in order for me as a software engineer to build what he wants, which is to automate everything with multiple stakeholders involved, I'm going to tell you right now that I'm going to need a team. I'm going to need a team of engineers. I'm going to need a proper infrastructure. I need to have somebody monitoring the servers 24/7. I need to have a lot of things built or installed. And all these things, all these costs can be saved just by leveraging a smart contract. And how can we trust the blockchain? So the blockchain itself is guaranteed by mathematical formulas and protocols. So if you can trust that 1 + 1 = 2, that means that you can trust the blockchain to function exactly as you design it to, right? So this actually takes away a lot of pressure from me as a software developer. It also enables you as a non-tech person to trust me, my implementation, because you know that you're not trusting me, you're trusting the blockchain itself. If you trust the blockchain, then our trust between each other becomes optional. It doesn't have to be mandatory. You can trust the blockchain, and you can trust that whatever we deploy on the blockchain functions as written. And that is basically it. It's not that different from how we do things nowadays. You run your own servers, you run your own services and all that. But the difference is that you have to trust your own infrastructure. Now, you just need to trust the blockchain.
Now the thing I would, by the way, we've got less than 5 minutes left. So if you've got a burning question, now's your time. Don't think of this as something that's way off in the future either. Now, you gave a couple of examples of countries who are already building their own cryptocurrencies.
I would say in the next 2 to 3 years. Yeah.
There are other examples that I find fascinating. So the country of Georgia in Eastern Europe has now put the whole of its housing transaction protocols on the blockchain. So anybody who buys or sells a property in that country, it's on the blockchain. It's recorded forever. Now think of what changes that's going to bring. Never again will there be an argument about who owns this property. Is it really yours? Is it really theirs? All those questions get resolved quickly. Many of those Eastern European countries, we think of them as being a little bit backward. In fact, if we think of them at all in Asia, we don't think of them at all really. But actually, they had rather weak banking and financial systems when they left the Soviet Union. And since they left, Russia has consistently tried to knock them over, basically, trying to destabilize a lot of those countries. So they see blockchain as a way of defending themselves in the future. In Estonia and in a couple of other countries, there are already banks that are fully on the blockchain. I've been told, but I've yet to identify where it is, there's an insurance company already on the blockchain in Georgia. So I'd love to be able to sort of give you clear examples of these companies, but I don't have them at the moment. But don't think this is like, oh, it won't happen in my lifetime. This is really coming quite quickly. And I'd like to just ask you guys some observations on what you see coming next.
Sure. Just to add to that, I think that there's a great company out of London called Everledger, and they've put every diamond in the world on the blockchain, or in the process of putting every diamond in the world on the blockchain.
So this is only possible because of one aspect of the blockchain, one thing that the blockchain provides. As you mentioned just now, it's immutability. How the blockchain works guarantees you immutability. And once we know that we can achieve immutability on the blockchain, these are the new business concepts that comes to mind. Putting land titles into the blockchain, putting copyright claims into the blockchain, putting your music, copyright information, digital rights management contracts into the blockchain, or even putting traces of diamonds. In fact, recently, the usage of blockchains have drastically changed how supply chains work in China. You can actually, there's actually a way where you can see where your steak that you buy in the supermarket comes from just by querying in the blockchain. You can see which farms it came from, which butchery has gone through, and things like that. So that cuts off a lot of fraud in the entire process itself. It uplifts the entire industry as a whole once you put these things on the blockchain because of the immutability guarantee.
Okay, well, the future's coming fast, and it is reality. I'm looking at the clock, counting down here. We've only got about a minute left, so I think I'm going to wrap up the session and just thank our two panel participants here, and thank yourselves for your questions. And if you have any other questions you want to ask us, then please tackle us individually or on Twitter or LinkedIn or however else you're connected to us. So thank you very much for your interest.